What's up, everyone? Good morning, and welcome back to another episode of Market in the Morning. I'm your host, Kevin Dubrisky, and with me, hopefully joining soon, will be Nilabh, one of our co-founders here at MRKT AI. But we'll keep going. The show goes on. We're going to cover some market fundamentals, what's moving gold, the Nasdaq, and the S&P 500, as they're all, well, gold and silver at least, have been hitting new all-time highs. So what's really pushing this rally? What's keeping us bullish? And are we getting that Santa rally that everybody's been anticipating? So drop a like, drop a comment if you're excited for today. Last full trading day until Friday. So remember, guys, tomorrow we have a half day for the New York session. Markets close at 1 p.m. Eastern. And then on Thursday is Christmas Day. Markets are completely closed for the New York session. So please don't get confused. You probably will see futures markets moving. That's okay. Futures markets are open due to other sessions, but we're not going to get the volatility that we usually see in something like the ES and NQ during that New York session on Thursday, because there won't be a New York session Thursday. So guys, drop a comment, drop a like, and let me know what you're trading today. And let me pull up the charts and let's see what market has in store for us. So the first thing I always like to do when I check my market fundamentals is I like to just get a quick overview of what's driving markets, right? And if we're looking at the S&P, slips below 69.30 on Russia strikes and Japan yield warnings. So that tells me right off the bat that yesterday was strong and bullish, but today we're already seeing some resistance overnight. So let's see, markets await key U.S. data releases, including Q3 GDP final estimate, core durable good orders, core PCE, and Fed visions on further rate cuts after 325 BPSs in 2025. Guys, this information right here is massive, and you don't need a degree to understand or have to know which reports or which economic releases are coming out. You just need market, and market will summarize it for you. Now that I know which reports we're looking for, I can bring up our economic calendar, and it's going to tell me exactly when they're coming and what to expect and how markets are going to react to it, which is even better. Give it just a moment to load in. Now myself, guys, I have the countries set to just US because I'm normally trading the New York session. I trade the Nasdaq and S&P 500. I also trade gold, and a lot of times those US reports will have a big impact on where inflation currently is. And when it has an impact on something like the USD, which is the US dollar, we know that it has a massive move on gold, an inverse move. So I have it set to US, apply, and I have it set so it's high and medium only. So I see today, durable goods is going to be at 8:30. So guys, we have that in about 6 minutes. Forecast is negative 1.5%. We could hit our brain icon and see how our market's going to react. So the impacted currency on this is going to be the USD. If it has a bullish reaction to the dollar, it's going to have a more bearish reaction to gold. And that's something we want to keep an eye on. What's cool too, guys, is you could also click multiple of these brain icons to see, okay, now what's GDP? Now it adds that tab right next to it. So I could click back and forth and see really what's going on. PCE, could add PCE on there. And again, just sort of glance through and see how these reports come out in real time, because markets are going to be showing them. They come out in less than 5 minutes. So make sure you guys are prepared, because this is going to have an impact. If we take a look at the charts right now, we see the S&P is, we could take a look at our previous day's high and low. So here's New York high, and here's New York low from yesterday. And right at the moment, we're trading within that range right here, guys. So we're within the high, we're within the low. We have already taken that high out overnight, so we are still holding these higher highs and higher lows. So ideally, we would like to see that continue going forward if we're following a trend. And when we find our technicals, we want to see if the fundamentals line up too, because the fundamentals are really the backbone of what's moving markets. The technicals, they work out sometimes great, but they really only work out when the fundamentals are aligning with them and giving that support. So intraday on ES, and again, it's slightly bearish at the moment. ES drifts lower from 69.32 to 69.28. Really not the biggest of moves. About a 4 or 5 point move. Ongoing Russia-Ukraine strikes. Now, something I will mention is when there is some uncertainty in the economy, equities perform very poorly. However, when there's talks of war or wars picking up, a lot of these large companies profit off of war, which ends up bringing markets higher. So Russia and Ukraine still going at it. We've seen that has not had a negative impact on the market for years now. So why would it start? But it's something that's important to be aware of because we want to know if other countries are getting involved, because that's when trade deficits and trade issues start to become, and the economy really could take a hit. And again, we know all of this information right here with market because it'll tell you your intraday bias, what's supporting, what's going against. Trump signaling next Fed chair will favor much lower rates. So this would be what could change bias. And because it says slightly bearish right now, and I'd personally like to look for a more slightly bullish approach, I'd look for what could change this bias. I know Trump signaling next Fed chair will favor much lower rates. That's a great sign. That's something that's been impacting the market for the better for months now. We've seen 25 BPS cut time and time again. Well, it's been driving markets higher and higher and higher. Futures still price in meaningful Fed easing over the next year. So again, high jobless claims about a week or two ago that came in. We see that, I'm sorry, not even jobless claims. It was the, let's see, I'm going to show you guys right now. How great is that? I'm going to show you, and we could check the dates. We do date range. I'm going to do from the 7th to the 23rd. And we could also, what's cool too, guys, is we could search events. So if we want to look for a specific job report or data, so let's see, I'm going to turn off medium for now, and I want to find that high impact. And it was a job data report, came in at 4.6%. It's about 0.1% away from really, it was unemployment rate, 4.6% right here. This had, it says actual ranging, but that was more towards the bearish sign. It did create a bearish move on the US dollar. I'm sure most of you guys might even remember this. This was last Tuesday when we had market in the morning, and we saw that trade happen in real time. We even called out a long on gold when that happened as well. So 2 minutes left till we have the news that we have today. That's going to be durable goods and some others. And again, we'll have those prepared. We'll see how markets come in, and we'll see how it impacts markets and find a real trade setup for you guys today. Just make sure you run that like button up and drop a comment as well. Always appreciate the support. Nilabh was supposed to join us today, possibly taking some time, which I completely understand, as I'm sure you guys too. It is the holiday season. It is the 23rd. Happy holidays. Merry Christmas to all who celebrate. And really a happy holidays and happy season from the whole market team over here. Guys, I'm going to go to today now, and that's because we have less than 30 seconds left. Look at this. How cool is that? Market now has a countdown. So durable goods, core PCE. Oh, I should have left unemployment on there. And GDP. Really going to have to keep an eye on these. And when they come out too, guys, what's cool is that market has an economic chart of every economic event that comes out depending on the economy. All right, here it is. It's pending. Durable goods, actual, wow, okay, less than expected for durable goods. Would have a bearish reaction on the dollar, which should be a bullish reaction towards gold. Let's see. So here's gold. Not the biggest reaction just yet, right? Markets aren't really giving us a quick move at the moment. We do see, just like we were looking at our analysis on ES, how it's within that previous day's range. When we look at something like gold today, it is far above that previous day's range. This level right here, make it yellow so it sticks out, 44.77. That's our previous New York's high yesterday. Since then, markets closed, New York session closed. Futures markets opened, and since the futures markets opened, we rallied over another 1% on gold. This is new all-time highs, guys. Gold's at all-time highs. Silver's at all-time highs. Silver above $70 a barrel. This is wild. Guys, gold is now officially up 67% this year. That is insane. Year-to-date, gold is up 67%. Wild. We can take a quick look. What I love to do too, guys, with market is it gives key levels. So I could see really what comes out. Oh, here we go. GDP. How did GDP come out? 4.3. Let's see, GDP. Okay, bullish. So that would be bullish on the dollar. So right now we have two contradicting reports. Hey, good morning, Garrett. Appreciate you, man. Two contradicting reports. We have GDP showing strength, growth in the US, but we have durable goods showing weakness. And weakness, let's see, below would be very bearish for the dollar, but for GDP, it's above, that'd be very bullish for the dollar. So at the moment, what do we see on the dollar chart? well, it's trying its best. It is looking like it's trying to move higher. A strong GDP usually will have a bit of a stronger pull than durable goods. GDP is really that gross domestic growth of the economy. A higher GDP supports USD hawkish Fed bets. So that's a little tough right there. Because if it's supporting hawkish, that means it's going against a future rate cut. Watch 3.2% plus for USD strength. Okay, so 3.2% plus for strength, and it came in at 4.3%, below 2.8% for weakness. No immediate FOMC meetings, but 2026 cut odds amid labor focus. So again, we're sort of focusing back to what we were covering before, and that was that unemployment rate and the jobless claims. So real interesting stuff there. PCE didn't really give us a range there on PCE. Let's see, 3.4%. Okay, so playbook above 2.5 would be very bullish. So really signaling a bit more towards the buys on something like the dollar. So again, be careful that gold doesn't feel that as well to the opposite side, right? Because we all know the dollar and gold have that inverse reaction. Silver continuing to push higher. Silver does not care what comes out as it goes higher and higher and higher. We can take a look at something like the NASDAQ as well. I know a lot of people trade something like the NQ or as most of the futures trade it, like XAU USD. So, I'm sorry, that's gold. Sorry, for NASDAQ is, what is it, US 100. So for something like the NASDAQ, sort of a similar situation to the S&P 500, where we're within that previous day's range, and we're showing a sign of weakness here. So again, if there's uncertainty in the economy, we're getting bullish reports, we're getting bearish reports, we're getting bullish reports that possibly shouldn't even be bullish. GDP growth rising while we're still very weak in the unemployment rate. Sort of some, again, contradicting in that if the economy is doing well, why are we losing so many jobs? If the economy is doing well, why are the jobless claims going higher? There's so many things that possibly don't add up. And with the S&P moving to all-time highs, with NASDAQ moving to all-time highs, with gold moving to all-time highs, we see that everything's moving in tandem. It's a little bit of a concern because gold is considered a safe haven. So if we're ever worried about, hey, markets are going to start failing, that's when people invest in gold. If gold's moving higher and markets are moving higher, that could also lead to a strong squeeze on gold. If markets start to flatten out or start to sell off, again, we get some uncertainty or worry and stocks start to sell, guess what? Gold might even push higher. The silver breaking above $70 is insane, guys. That is wild over here. What's up, Bands? Good morning, man. Yes, sir. What's up, Eric? Good morning. Good morning. Happy holidays to you and yours. So as you guys see, I have like blue charts over here, and this one's more black. This is because I updated this one recently. I'm just going to go into my settings and apply to all. That way, they're all fixed. Now, I do want to take a quick look at silver too. Silver has been on a historic run. If we look at the daily time frame on silver, I mean, guys, look at this. Ever since November 24th, we'll call it, and we'll throw our measurement tool up. We'll go from low to high. And again, we're still making high after high. 45% run on silver since November 20th. I don't know if any of you follow me on social media. You should. If you don't, at Trading with Kev on Instagram. But I covered silver back when it started to rally over here, and I said, here we are breaking 55. It's just getting started. It's going to head to 60. Broke above 60, said, here we go. We're heading towards 70 next. Here we are at 70. Silver has been a phenomenal, strong, heavy metal asset, and it's way below its inflation-weighted price. Because of that, it's giving it a very strong squeeze. It's practically flying untouched, unscathed. And we could look at silver here too and see what's really impacting it, right? Let's see. So silver futures. Now, I know that supply issue was a big factor into silver as well. Good morning, Bands. Yes, sir. Yes, sir. Good morning, everybody. Silver hit 70.13, near all-time highs on Fed easing bets. Russia, massive Ukraine strikes, sustain safe haven flows, like we mentioned earlier. Look at this, guys. It should be like super bullish at this point. Absolutely wild moves on gold at the moment. Something we haven't checked, guys, and that we should always be looking at because we have such easy access to something like market is the high impact. What's really moving in that high impact category of our live news feed? Because guess what, guys? If something comes out, if Trump tweets or he announces something, or Putin does or says something, or China does or says something, or even a big US company like Nvidia announces some type of partnership and completely skyrockets, we're going to see some type of strong high impact news, and we're most likely going to see a response to that in the market. So it's important that we're not blindsided by that and we're not in a trade and market suddenly shift and go super strong. We have that ability to keep an eye on market AIs, which is news feed, and say, okay, listen, this just came out. This is high impact. I'm going to possibly exit my trade. Or I might even look to trade with that high impact. And once we start to get that reaction, I want to go long because this looks like it should have a bullish reaction on ES, a bearish reaction on ES. That's what's so cool too, guys, is it not only gives you the headline, gives you a little bit of a rundown of it, but it also tells you the impact it should have on those equities. Now, let's take a quick look. We mentioned earlier about silver and what's really supporting this bias. So, what supports the bias? Fed's Moran warns of recession risk without policy adjustment. Recession, guys, what does that immediately ring in your head? Uncertainty, worry, heavy metals, silver, gold, flying. That's that safe haven. Gold is really more of the safe haven, but the heavy metals do like to trade together, just sort of like any ETFs or what's it called? You guys know what I'm talking about. Fed December rate cuts and QT suspension. So remember, they had quantitative tightening end recently. Now, because they ended quantitative tightening, that does not mean they go right into quantitative easing. When we go into quantitative easing, it's when we start sort of getting things going. Quantitative tightening is when they're taking things out, right? Taking things meaning money. They stopped the quantitative tightening. They have not shifted it to quantitative easing yet. But seeing they stopped one, are we going to start to shift to another? Are we possibly waiting for May when Powell's term ends? There's a lot of sort of things building up that's coming up towards this midterm year in the economy, guys. Very important to be aware of all of it. We have a nice summary and a nice breakdown here in market. So silver extends gains to 69.63, holding near record highs, ongoing Fed dovish stance, with recent rate cuts in 2026 easing priced in. Here we go, guys. This is massive right here. 2026 easing priced in. We are getting that bearish reaction on the ES and NQ now, just so you guys know. Here we go. High confidence. Fed dovish cuts confirmed. That's great. Fresh Ukraine strike boosts safe haven flows, and price confirming higher highs. These are three major confluences that we like to look for as traders. Guys, when we trade, day trading, swing trading, we're not gamblers. I hate that thought that if you trade, you're gambling. No, we're trading with high probability. We're looking for things that line up in our favor, that stack confluence. And market is the master of stacking confluence. So what could change this bias? We do want to be aware of that as well because yes, silver's flying right now. But what could change that? What could flip silver on its butt and completely reverse everybody that's been going long this whole run up? You guys see that bearish move on the NASDAQ there? The ES as well selling off. Now, I do want to take a look and see how gold's reacting. So look at this. Dollar's gaining some weakness here. Now, at this point, guys, looking at the dollar, I do like this area we're in. We see that this was a strong area of support. So if we're looking for a strong dollar, I'm going to be looking for more of a weak gold. And we mentioned earlier about the dollar and how some of those reports that came in. But let's also look at the DXXAU USD. Now, I know it's also dollar slips lower. It's a bit more bearish lately. We see that it's been more bearish, right? There's no doubt if we look at the daily time frame, we see that for the most part, we've been moving lower and lower. We were at some point moving higher on this run right here. Delete that. On this run right here, we're making some higher highs, higher lows. But when we took this area out right over here, this is the beginning of December, right when gold really started to pick back up pace. We finally were breaking new lows again and making some lower highs again. So overall, I would still be a bit more bearish on the dollar. I do see, however, remember this spot right here, that we just mentioned before. Too far back. Let's see. This area has been major support in the past around the beginning of October. Then it was support again, the beginning of, looks like about mid-December. And now here we are again in this area with economic impacts, which could be those pivots. So I do want to keep an eye on that. Again, gold flying higher, all-time highs. We also don't want to fight the trend. And when we see the fundamentals line up with that trend too, let's pull gold back up. Go look at XAU USD. Again, it's going to be giving us same fundamental breakdown for the most part. So we do want to just sort of keep an eye on whichever one you do trade. Q3 GDP deflator, 3.7% to 2.7% consensus. Holiday thin liquidity risks volatility. Be careful with that, guys. Again, markets are going to be running on some lower volume today. And the main reason for that is because of the holidays. If we think of it from a large investors' perspective or an institution or hedge funds perspective, tomorrow's Christmas Eve. I've got family down in Florida. I'm going to go travel to them. Not traveling on Christmas Eve. I'm traveling either the day before or the weekend before, which means we're seeing large institutions, large hedge funds, possibly not moving that millions and billions of dollars that they normally do have access and strength to. So we do want to be careful with that. Lower liquidity, lower volume. Let's be careful. But we see a lot of strength in our heavy metals like gold and silver. Happy holidays, everybody. Happy holidays. Ideally, I'd like to see gold hold up somewhere. Let's see. Bonds took a quick shot to the north. So bonds moving higher usually would be bearish for equities. Now look at that again. We'll put the ES back here in the top left. Now, ES is still within that previous New York's range, right? It hasn't broken south yet. Now, something that tells me is the Dow probably hasn't either then. Yeah, look at this. The Dow was a lot stronger yesterday than the NASDAQ. So here's the Dow's low a day on the New York session. So that's what's holding the S&P up right now. It's important to know the fundamentals and really what's driving and moving markets. If I pull this out to the left, I see this was a very key area on gold for support a couple of times overnight around 45.07. Now, what we can do too on gold on market is I could look for some market key levels. So right now I see 4,500 is a key pullback level, 4,500, and that's right below that support zone that I have. So that's huge. Could use a volume profile or something. I don't know about you guys, but I'm a big fan of using volume in my trading. And the first thing I notice with the volume is sort of that P-shaped pattern, which shows me low volume to the downside and higher volume to the upside, which tells me price and volume are accepting price at higher points. So if we are able to get a little bit of a dip down here, I'm going to look for longs to trade back within that range, back to the upside, right? We're trading the trend. Our fundamentals line up on a bullish factor as well. There's really a lot telling us to look for longs right now on gold, but that doesn't mean we would want to go long right here at these highs that we're making. We'd really want to be patient and trade the levels that we see. 45.35 is the next possible target to the upside. So I also like to mark that out as well. So here's 45.35 right here. And I actually have a template saved for market levels. So I'm going to copy that and paste that. And we're going to drag that next one down to 4,500 because those are the two levels I'll be watching today. Sort of give me an idea of the range of gold. Because guys, look at this. This is also now our range in gold. But it also gives us an idea to say, okay, let's look to buy the lows and sell the highs. Now, just because that saying is buy the lows and sell the highs, it doesn't mean you have to sell the highs. What that saying's referring to is when we're range bound, we would want to buy the lows and get out at the highs, or sell the highs, get out at the lows. But because we're in a bit more of a trend, still a bit more of a range on this lower time frame, but an obvious trend on a higher time frame, we would really want to look to buy the lows and get out at the highs. We wouldn't want to sell the highs because we see that we're uptrending. And if the off chance that we do break the key level and it becomes support, we don't want to be selling on a bull trend at the highs. It'd almost be like the opposite of catching a falling knife. So there's a few things I'm looking for. That's really our breakdown on gold today. Ideally, I would like to find some support somewhere below this 45.04 near market key level 4,500 for some possible longs. Same with silver, right? We see a very strong move on silver since 8 o'clock. A lot of volume came into it too at this time. And I'd like to see, okay, do we have maybe a Fibonacci? Whatever levels and whatever technicals you use are great, but just remember the fundamentals are driving it. So when you find your technicals after your fundamentals, fantastic, A plus setup. When you find your technicals and you start to try to force fundamentals, that's when things aren't really lining up right. Because guess what? Fundamentals are out of our control. We have nothing to do with them. Maybe unemployment rate, right? And I'm just kidding. But we have to keep an eye on everything, guys. And fundamentals are the backbone of the economy. That's telling us what's going on in the economy. We want to keep an eye. Sitting on a rock. Exactly, man. Let's see. So look at this. This is what I was telling you guys about earlier, how market has that dashboard that shows you the economy on charts. So it could give us an idea to say, okay, look, unemployment rate 4.6%. That's the highest it's been in a long time, since 2021. This chart only gives you the past year, but this is the highest unemployment rate has been since 2021. CPI 2.7%. So again, that's also taken a bit of a dip there. We see it's been in a bit of a downtrend, right? It's been creating some lower slopes. GDP somehow stronger. I don't know, man. This random pivot on GDP, better to jump in. Yeah. We'll see. We'll see, man. From May to June, this is where we were just decreasing on the GDP, and then out of nowhere, from June to July, we just went from negative 0.50% to positive 3%. That's a very odd jump in the GDP, and something we sort of want to look for, because what if this is something that's not fake news or fake information, but quite possibly could be revised down in the future? So there's definitely a few things we want to keep an eye on. Consumer sentiment, same thing. This is a report that's been showing us some consistency. It's consistently moving lower. Unemployment rate consistently moving higher. CPI consistently moving lower. Interest rate, we know that they're bringing those lower as well. There are so many consistent reports that GDP is now our outlier. And when GDP is our outlier, again, that's sort of an issue to say, hey, listen, is this the right report? Is this the right reading? Now, markets are still going to react to it regardless. And what's great too is market recap icon up here. Let's see. We could click the brain icon, market recap, view market summary of this day. This is December 23rd. Let's do yesterday. Global equity saw broad gains in Wall Street, leading to tech-driven rally. Meanwhile, the dollar weakened against the yen. Again, gives you a breakdown. Look how cool this is, guys. Really a fantastic breakdown. Great area here in market. Sort of an untouched gem over here, guys. Not a lot of people I see use this, where it just gives you a breakdown of what's moving those markets, what's moving the economy. Again, this is the backbone of markets and structure, right? Do you want to know if gold is supported by a weak and poor economy or an uncertain economy? Here's your answer. Do you want to know A, B, and C? Here's your answer. Anything you might have a question on about fundamentals, about what's moving markets, about what could reverse markets, Market, MRKT, your market research knowledge terminal, has the answer. Guys, let's see. Any high impact news? Nope, still just that USD, the US advanced PCE. Good, we're getting that pullback on gold. It's exactly what I was looking for. I want to see a pullback to try to buy the lows. ES. Now, ES and NQ, guys, I did want to take a quick look at the NASDAQ. I do want to turn VWAP off on NASDAQ as well, though. Visibility, I'm going to turn that down to less than 15 minutes, so I can only see it on the 5-minute now. How cool is that? So NASDAQ, I really wanted to see, so this supply zone right here, look how many times we respected this area, right? So just like Jeev would call it, that key area where price has respected in the past, where it's a support when price is above it, and then it was resistance when price is below it. We see it was resistance 1, 2, 3, 4, 5 whole times before we finally broke it here and then held it as support. We held it as support once. I'd like to see if we could try to hold it as support again, but a lot of times these areas tend to fade out the more times we break and retest them. So what I wanted to see is if we had any type of support zone that formed like right over here, overlapping that zone. See if we have a new area of interest. But right now, I'm really not seeing too much. And what we can look for too is we can look for the market levels on NQ and see, okay, in that support area I'm looking for, do we have a pullback zone? Wow, it's quite the pullback level on NASDAQ, 24,782. 20, I don't think, I mean, listen, guys, we dropped to 24,782 today. We're going to catch a little piece of that, I would hope. But we'll see. That might be a little bit of a glitch there on market. That looks like it'd be more of the pullback level if we were looking at this day over here. But we could look at the bullish target now. Again, just finding some levels that line up. 25,835, 25,835. Now that's a bit more realistic, right? Because when we look up here, we see that we're creating. I'm going to turn off the drawing. Actually, what I'm going to do, guys, is I could look up NQ and I could do a different contract. Oh, give me a different contract. NQ. Here we go. H. Now with a different contract, I have a completely naked chart to show you guys, so we don't have to go over all of that again. So we can look for that area of interest right here. That's the support zone I'm looking for. We had resistance. So it's just technicals are great, again, like we mentioned, but we want to be able to find those fundamentals that are driving it, right? And if we have stronger fundamentals saying NQ still intraday slightly bullish, higher time frame is still slightly bullish, then let's see what's really holding that. Okay, we know signaling rate steady for months. That's a little careful. Holding rate steady would really bit more go against the trend. It's the rate cuts that were giving us a bull trend. Waller stresses there is no need to cut rates. Fed Williams says there is says doesn't have a sense of urgency to change policy. So this really wouldn't be leaning too strong on the buy side. Nasdaq will have to keep an eye on. We know that tech does happen to respond differently. Now we can take a look at our equities as well. See if anything really is moving today. S&PS up 3% intraday in the Nasdaq 100, leading gainers amid strong semiconductor momentum. Okay, so that's pretty cool. MU, that's Micron. WBD, guys, I don't know if you heard, but now Paramount is saying, it's funny, I was in a bagel shop this morning. Paramount is claiming now that Larry Ellison has agreed to provide an irrevocable personal guarantee of $40 billion of equity financing for the offer for any damage claims against Paramount. So that's Paramount saying, hey, listen, we're not out of the race yet. We still want a chance at Warner Bros. Right there. And again, market is dumping that on the screen for us. It's showing us, hey, this is what's going on. We can hit the brain icon, and it's probably going to give us a summary of exactly that. So look, see that? Warner Bros. Discovery confirmed receipt of amended unsolicited $108 billion tender offer from Paramount. Backed by, guys, look, that's crazy. This is mind-blowing to me right here, guys. I just saw this on a news channel this morning. If I didn't see that on a news channel, guess what I have not known? I wouldn't have known this. Market doesn't care. Market says you don't need a news channel. I'll cover everything. I'll tell you everything. What's going on in the economy? What's going on in the streaming world? What's going on in the world, period. Market is your research knowledge terminal. Does not get much better than this. Stocks soared 3.5%. So guys, this also would give Warner Bros. A stock price target of $30. This offer right here. Whereas Netflix's bid was at $23 plus some options and stuff. So this is pretty cool, really great. Yeah, Bloomberg who, man? I mean, Bloomberg ain't breaking it down like this. That is for sure. Guys, drop a comment. Let me know what you're trading today. Let me know if you think you're ready for today. And don't forget, watch things like the VIX, the dollar, all depending on what you trade. Let's see. Let's also see economic-wise. Let's see. COT report. Has this been updated lately? We see December 9th COT report. Now, guys, the COT report is the commitment of traders positioning, right? So this is basically telling us if we're bullish or bearish on some heavier hedge funds and institutions at that level. So if we look at something like metals and we look at gold, gold is holding at 85% bullish. You could also look for silver. Silver is also 75% bullish. Now let's come down here to gold and we're going to click it. And I'm going to show you guys how you could read the COT report. So large speculators, this blue one right here, these are the people that are looking to trade with profit with the market. So they're looking, if gold's moving higher, they want to be long. The commercials are the ones who are hedging against the market. So they're already in a long-term position somewhere else in their portfolio, and they're hedging with futures against their position. So they want to be trading, believe it or not, against the trend. So when we see that pink line curving down like we see right there, and the blue line curving up like we see right now, we know that there's even more strength starting to come into it, and they're still net positioning more positive. We see this is their net positioning. This is their long and short ratio by traders. This is their open interest. I don't really use their open interest too much. Total outstanding contracts, really that net positioning and long and short ratio by trader type. So really great stuff there, guys. Absolutely wonderful. Market gives you an complete overlook of what's going on in the economy, what's going on for that specific futures, forex, even has some equity coverage as well, as we saw right before with the Warner Bros. Discovery. Really fantastic stuff. Guys, I hope you enjoyed today's Market in the Morning episode. It has been phenomenal. You've been a great audience. Make sure you run that like button up, and I hope you all enjoy your holiday with your families. Take care. Don't forget markets in the New York session, at least tomorrow will be a half day. So New York session closes at 1 p.m. Eastern, and the following day is Christmas Day. New York session is completely closed. And then the next week is a New Year's Eve and New Year's Day. New Year's Eve is unaffected, so complete full hours. New Year's Day markets are closed. Guys, I hope you enjoyed today's show. Hit that like and subscribe. Sign up for Market Today. It is the best knowledge terminal, research terminal, whatever you want to call it. It's the best fundamental tool in the game. Really breaks things down way simpler than any Bloomberg ever can, and it really gives you that insight that you need. Absolutely. Eric, everybody else, have a great rest of your day. Have a great holiday, and I'll see you guys next Tuesday for